All right, guys, back to work tonight. It's Wednesday evening. I know that time flies when you're having fun, doesn't it? But it's time to get back to work. Thursday is right around the corner. It's the 23rd of June, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're watching for the first time tonight, it's great to have you with me. My job tonight is to get us ready for the best trades for tomorrow. That's Thursday's trading session. I get a fantastic video in store for you guys tonight. Charts are all prepped in the background, as you can see. S&P's ready. Nasdaq's ready. Gold's ready. Glad to see you are ready right along with me. Boy, oh boy, I get a lot of, potentially some big moves in the markets tomorrow. Got some coiled up ranges on the S&P and the Nasdaq. Whenever you see the markets coiled up like that, you always know potentially some big breakaway moves could be right around the corner. So I want to make sure you're ready for that tomorrow. And as I mentioned last night, I thought the easy money was on the short side. Gold just dumped off those highs today. That big move down on gold has potential now for a big pendulum swing. The weekend gap is down there. Major lows on our radar for tomorrow. So really excited for tomorrow, Thursday's trading session. By the end of this video tonight, you'll know my favorite trades for Thursday. You'll also know some of the traps to avoid and how to capitalize on other traders, right, getting themselves in trouble as well. Now, before we jump into this video tonight, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening, my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that little bell icon so you always get notified every time we publish something new. And if you guys have any questions for me, drop those questions for me in the comment section. Don't be bashful. I always enjoy kind of teaching more in the comment section, so don't be afraid to ask questions. And as always, I appreciate you guys tuning in every evening. If you enjoy this video as much as I enjoy making it, do me a big favor, hit that like button, that thumbs up for me here on this YouTube video. But make sure you subscribe, though. I don't want you to miss all the good stuff we publish every evening on this YouTube channel. But speaking of every evening, time is ticking. Thursday is right around the corner. Let's get these charts prepped up. I got a bunch of great trades on my radar for tomorrow. As I mentioned in the intro, we have, pretty much the Eminis are both all coiled up here right now. We are definitely still on the bullish side. There is no doubt about that. We haven't rolled over yet. I was hoping we were going to roll over here today, as I mentioned in last night's newsletter. But you'll notice, especially in the Nasdaq, we have some pendulum swings up here that if these buyers, I'll tell you, if the buyers can't get their act together and push this thing higher here, we've got some, on the S&P, I've got some overhead resistance here on the Nasdaq. So I'll tell you again, we're definitely bullish, and I've got some breakout trades on my radar for tomorrow. But I'm going to say it again, the easier money tomorrow is likely to be on the short side, and I get some great reversals, some great failure setups I'm tracking for tomorrow. So if you're an S&P trader, NASDAQ trader, you definitely want to stick around for those here tonight. And again, on the gold, right? Gold, I think, is pretty obvious, right? Gold had that range down below it. We got a little bit more of a pop than I was expecting today. There was, of course, that inflation news came out, right, this morning at 9:45. I think the market got a whiff of that number a little bit ahead of the time this morning here, popped up, and of course, after buyers try a few times, right, we come now collapsing back down. All of that momentum, we have this massive potential now for this pendulum swing all the way back to those major lows around that 1762 area. So, I would love to short some pops on the gold tomorrow. I would love to trade some drops as well. And of course, you know me, I'll make sure you're ready for the buy side as well, because we definitely might get a bounce reversal off the low. So I could definitely see a couple easy long setups on the yellow metal, especially because we get some big news coming tomorrow morning. Speaking of big news tomorrow morning, before we jump into these charts here, let's just make sure we're all on the same page here tonight, because tomorrow it's coming at us again. We get some more big news on the schedule here for tomorrow. As you can see here, no shortage of news, right? 8:30. Apparently, everybody was all bent on 8:30 tomorrow morning. Durable goods, GDP, international trade. trade, and of course, jobs. Now, the international trade number is not that big of a deal, but as you can imagine, though, the durable goods orders, right? Manufacturing is a big thing right now with the reopening of the economies around the world. GDP is obviously going to be important as people start to compare today's GDP with a year ago, 2 years ago, right? And make bets in the future. And of course, jobless claims, right? We have seen a spike in jobless claims over the past 2 weeks. I want to say it was a spike last week. It was just last week, I believe. And correct me if I'm wrong in the comments here, but if I recall, we saw a spike in jobless claims last week. I think it was just 1 week, though. If we see another spike tomorrow, that could definitely lead to some yield curve changes, and things could really domino from there. So there's a powder keg of news tomorrow at 8:30 Eastern time. Now, I will be honest, a lot of times when you see a lot of news stacked up at the same time, it kind of creates a bit of a bee's nest, right? Where it kind of feeds into itself. So don't be surprised if we see a little bit of chop and slop, almost analysis paralysis between 8:30 and 8:45 tomorrow. But as we get into 9 o'clock, into the opening bell at 9:30, and as always, right, as I always tell you guys, right now, lately, and this may not be forever, but lately, the best trades in our trade room have been between 9:45 and 10:45. So, again, I would hope we'll get some nice big, jumps in the markets tomorrow after 8:30, but don't be surprised if it kind of consolidates a little bit, some analysis paralysis, and then we get those big moves, 8:50, 9 o'clock, 9:30 into that, 10 o'clock hour. Now, of course, don't forget, right? Speaking of 8:30 news, don't forget we open our trade room every morning, Monday through Friday, 8 o'clock Eastern time. I would love to have you there trading this stuff right along with us. I'll put all the membership links you guys need in the description of the YouTube video, or I'll put a big button for you below this video tonight if you're watching on our website. So definitely check out that link. Make sure you get registered. That way you don't miss our next trading session. All right, looking good here. So Thursday news is, again, pretty straightforward. And don't forget, as I've been mentioning here throughout the week here this week, I will not be back tomorrow night for our Thursday edition of our nightly newsletter. Just to give you a heads up, the big news on Friday is that 8:30 PCE number, the personal income number on Friday. Not to worry, we'll come back for a full week next week. And don't forget, next week is a big week, the first week of the month of July. Got a holiday weekend next weekend. We'll talk more about that, obviously, when we come back on Monday. But again, tomorrow, there will be no newsletter tomorrow night on this YouTube channel. Let's get back to our charts, though. Now you guys know what to expect here for tomorrow's news. And we get a pretty good plan of attack here for coming back next week. Next up here, grab the charts here, S&P, Nasdaq, and gold. The S&P and the Nasdaq are very similar. There's a little bit of difference here, but they're very similar. Gold is definitely one that you want to stick around here for tonight. Why don't we grab the S&P first? Let's get the ranges out of the way first, and then we'll get the party really kicked up on the gold here a little bit later on in this video. What's the key takeaway right now on the S&P? It's a range market. That's the key takeaway right now. Range-bound markets are balanced markets. Ranges act like magnets. What you want to do is you want to find levels of support to buy off support, find levels of resistance to sell off resistance. Basically, it's a buy low, it's a sell high, focus on failures, and we'll talk about that more as we go into it. And breakouts, right? Because if there's one thing tomorrow that kind of gets me excited is the fact that the way that we haven't quite rotated back to those highs, we may see a breakout and go back into previous ranges that we've had so far earlier in the week here. So range market, think of it as a magnet, buy low at support, sell high at resistance, fade the breakouts, focus on failures, and of course, anticipate potential breakouts on strength if something changes. Now, most important thing in addition to that is how rotation works when it comes to a trading range. For example, you'll notice I've got this measurement, this kind of rectangle down here. If I zoom in on this range, to make a long story short, right? The market goes up. It trades sideways, it pulls back, and then tries to make a run higher. The amount that we go below the range is usually about the amount we go back above the range, right? It's because ranges are balanced. So the amount we go below is oftentimes the amount that we go above. And so you'll notice that's a really big clue, right? We obviously did not take out that pendulum high up there, and the market now has rolled over. Now, this is great for the bears. It's not very good for the bulls for two reasons. One, when professionals see that pendulum swing failure, that rotation failure, they start to get more aggressive on their shorts, right? Let's put it bluntly. The professionals in the market can smell that failure, and they'll start to get aggressive, right? Hitting trend lines coming down overhead. That's the next problem, is that when you get that lower low, right? So they make a lower low here, but they don't make that higher high here, or at least double top. Now there creates this falling resistance trend line. So now you've got this cocktail of sellers who are just looking for any chance to get short because they saw the failed rotation, and that trend line overhead. It just gives the buyers a very difficult job, because are you going to buy into that trend line? I hope not, right? So that's kind of the nuts and bolts of this, right? The range is the magnet, and we watch this rotation because there's a lot of clues in the rotation, and of course, right, this trend line, right, coming down overhead. Now, I'm in the same boat I was yesterday, where I still think the easier money right now is on the sell side. There are a lot of ways, though, we can play this market. I don't know what the future brings, right? There might be some news overnight, et cetera, et cetera. So my whole thing in our trade room is just trade the darn chart, right? Trade the darn chart. So the big thing is, let's say we go higher here, right? If the market does, let's say buyers come in, they trap off that low, right, and we make a run higher. If we can make that run higher now and get up around these highs, there's a bunch of different ways I can get short. For example, as the market rolls higher here now, I can look for buyers here to come in and try to buy. And because we're so bullish, I would wait for the buyers to try twice, right? Try once, try twice. I can draw a trend line off those highs. I can sell into those stops for a failure pattern, right, off of that high, right? So imagine we jump up. Right? Imagine we jump up on strength. The buyers try it a couple times. I get another one of those falling resistance trend lines. I can sell right off that trend line. Or sometimes we don't get that trend line. I can sell right off of that failure, right? So kind of keep that in mind as we go higher. Now, sometimes as we go higher, we don't get that big of a pullback. So let's say, for example, we go up a little bit, right? And then the buyers try once and the buyers try twice. What you want to do is look for a trap entry in this situation, and we'll talk a lot about traps in this video, and I'm going to go over a lot of details of traps in our. For example, we have a quick start trading class here at School of Trade that'll kind of bring you up to speed with how we trade in our trade room, with all our favorite entry setups, how we find levels of support and resistance. So I talk a lot about traps in that video series, that quick start trading class. Nice shortcut to kind of bring you up to speed there. So I'll drop a little link up there for you in the upper right hand corner. So make sure you grab that if you want to get kind of a shortcut to kind of get your charts all set up and trade right along with us in our trade room. But that will be a trap setup, right, off of that high. And the reason for that is because you don't want to trade inside, right, of that trading range, right? So think about those two options as we go higher. Again, I want to sell high, right? The range below me is a magnet. And again, even if we do take out those highs up here, I will still look for that short. Now, by now, you're wondering, okay, so how do I buy it, right? As it goes higher, we must be looking to be a buyer at some point. Well, as we go higher here, if we can make a strong run up, if I can get a pullback and the buyers hold that pullback, I can now start looking for traps up here. Now, be aware of this because this is going to be tricky. This is why I think the easier money is on the sell side. I'm not saying we can't get long. I'm just saying right now, we need to see some evidence here that these buyers have their stuff together, right? Because they're not showing us anything yet, right? There's no reason we should trust this thing as it goes higher. So if it does make a strong run higher, I need these buyers to put their money where their mouth is, show me they can hold that pullback. And if they can, I'll grab that trap below that low, because what's my problem up here? My problem is I don't want to buy into these highs. Okay, now this pattern, I'm just simply drawing it up right now. This could happen a little bit higher. It really anywhere up around these highs if we have, here's the key, enough strength running, shallow pullback, higher high in price. That's the ticket. Now, sometimes what happens is the market will jump up and it will start to grind higher. Right? It'll grind. If that happens, that basically confirms that move for us. Just mark up that high, mark up that low, and we start looking for pullbacks off the low of that, right, of that channel. Now, keep in mind, right, this is a 6,000 tick chart, right? This is kind of an anchor chart we use in our trade room. What I'll do is I'll drill down to a faster time frame, like a 1,000 tick chart, and I'll find my entry setups. Most common are going to be seller failure patterns. And again, failure patterns, we talk a lot about that in that quick start class I mentioned in the upper right hand corner, right? So we definitely have potential for the long side here, but we've got to get some proof as we go higher. Because again, major resistance range below us. Hopefully you can see why, right? I'm so concerned about buying as this market goes higher. Now, what if we go lower? If we go lower, this is where the fun begins, because now we can start to get really, relatively aggressive with our shorts. We already know those buyers have failed, right? Or at this point they have, right? So one of my favorite kind of failed rotation trades, if the market rolls over like this, is to look for that same trap entry, right? Look for that move lower, that shallow pullback, that lower low, and that trap, right? It's a very simple pattern setup. And I'll tell you, you want to look for mark off that low, mark off that high. If you can get a new channel on there, man, oh man, that is a great setup. One more scenario would be, as we go lower, is to look for the pullback and the bears jump off the moving average. If I get a 1, 2, 3 where the bears literally jump off the moving average, now you know the buyers have lost control, and now you can mark up that low, mark up that high, and again, drill down to the entry time frame, the 1,000 tick chart, and grab your bull trap, your buyer failure, right, into pullback combination. Again, you're going to learn those small entry techniques. You'll learn that stuff, right, in the quick start trading class that I mentioned in the upper right hand corner, right? So those are where you really start to get excited as the market rolls over. Now, if the bears can take control, we talked about this last night, we've got this big range down here, which is just begging to get hit, right? That 42.15, 42.10 area. That's an easy magnet, right? Because ranges act like magnets. Now, you're probably wondering, okay, so what if we take out these lows, though? What if we take out these lows? Can I buy this? I mean, didn't you say, Joe, buy low at support, below a range? I can definitely buy this low, but what's my concern? My concern is two things. One is momentum, right? As we rotate off the high like that, momentum builds for who? For the bears. I know we're an overall bull market, right? But I'm not a long-term trader. And I don't think if you're watching this right now, I don't think you are a long-term trader either, right? This is not a long-term trading strategy. Yes, you can apply this to a long-term strategy, but I'm talking about short-term trades right now. For me, right, that move yesterday is yesterday. It doesn't really matter to me any longer. If we go above the range and come rotating back down now, there's a trend line coming down, all of that momentum over, right, coming lower. So you really got to pick your spots wisely here if you want to be a buyer. I think the biggest thing is they have to make sure, right? They have to make sure they take out that low. They got the low taken out. Now we've got to get the bears trying once, trying twice, And honestly, I think the best plan of attack here for that entry long is another trap. Now, I do love traps. It seems like everything's a trap with me here tonight so far. But the reality is I've got a lot of problems with that trend line coming in, and there's just no better entry setup to get in at a better price. Again, same thing going higher. If I run higher here, I want that trap below that low because, again, I'm worried about buying too high. It's the same idea up around those highs. Just apply that same technique right down around these lows. I'll tell you, though, that is going to be a very difficult trade. That's going to be a tough one, right? That will be more difficult than getting short. The easy money is the short side because, again, as it rolls over and goes lower, everybody's looking for that short, right, above that high, or we get the market to roll over, find that new channel, right, and we're selling that first test, that first pullback off the high of that channel. So very excited for tomorrow. And again, when we get these days where we're coiled up like this, it really gets me excited for a nice big move, the following day, right? So, tight, narrow range today, potentially a big move tomorrow, right? We'll wait and see what we get. The Nasdaq is going to be something very similar to this. The Nasdaq, you'll notice, though, has one very big difference, and that is, yes, we are range, same idea. Yes, we are bullish into that range, but you'll notice in the NASDAQ has a lot easier job ahead of it. Can you see why? Why is the NASDAQ have an easier job ahead of it? Because it's got that higher high, right? There technically isn't any falling resistance trend line yet, right? Now, that's the thing, because you can also see here, I've measured up the amount below the range. And these buyers, they really need to get in here and show us they mean business. They have to get this run up at least back to the pendulum swing, ideally to take out those highs, to really give them a and I say this, I say it, with tongue in cheek, but to give them a fighting chance here for tomorrow, because if they come up, for example, and you'll notice I've got this trend line drawn off the lows here, up around this high here, right? So if they come up and they come off that high right now you do have that trend line now, and now you've got potential for this thing to roll over and really tumble. So the buyers have an easier job than they did on the S&P, I think, but at the same time, though, again, the buyers had a lot of chances here today. They bought those lows. They could have easily pushed. But, as I mentioned last night, if you watched last night's video, we had a measured move right here, a measured move right here. So, the easier money was not on the buy side today, right? It was waiting for those pops and shorting them back down again. Now, my kind of best plan of attack for tomorrow, it's a little bit easier on the NASDAQ because we're already at the all-time highs. So if we can crack through those, there's a lot more space overhead. Compare that to the S&P where we've got the all-time highs still overhead there. So that could create a bit of a headache as the market tries to rally higher. As the market goes higher here, I've got plenty of resistance, right? I've got my trend line or my hidden channel resistance, pendulum swing resistance. Obviously, all-time high will act as a slight level of resistance. It's not that big of a deal right now, but it will be resistance in one way, shape, or form. And so the easier thing to do is as we go higher here, right? Get those buyers trying a couple times, trying once, trying twice. Again, we are rotating off of that low. So by the time we get there, it will feel very bullish, right? A lot of buyers buying breakouts. Once we get those buyers trying to buy that pullback, and again, I would recommend wait for them to try twice, right? We saw back here. We go up, buyers once, buyers twice, and then back down from there. Remember, this is a 4,000 tick chart, right? We're going to drill down to an 800 tick chart, and we'll find those actual entry setups. We'll draw that trend line off the high. We'll identify where those stops are, right? Think about it, right? If you're a buyer and you're buying into that high, your stops are sitting right below those lows, and that range, that magnet, is just waiting to be, right, to drag this thing back down again. I can then, of course, sell into stop losses. I can sell, again, I always like that trend line short. That's always my favorite short. There's a bunch of ways we can take this thing. And then, of course, that failure into those stop losses. Now, keep in mind, and this will also apply to the S&P as well, just like the S&P now, we now can measure we now can measure the amount above the range. We can project that now below the range, right? And that gives you an easy target on the opposite side while we're making that rotation, as they say. Mark up that low, mark up that high, and you can definitely be excited about shorting that first pullback right off of that high. Now, what you want to think about here is, think about the market runs up, right? The buyers try once, the buyers try twice. Again, right? Trend line, you've got your stops, and you're selling it back down in. What the best entry here, again, other than simply selling the trend line, selling the stops, the best entry here now is mark that low, mark that high, and grab that, as we always say, first test is always the best test, right? That's a great short. And again, we'll drill down to a faster time frame there. My two favorite entries, which you'll learn in the Quick Start trading class, I'll put that link in the upper right-hand corner for you there. You'll learn about these in the Quick Start class, the trap entries and the failure entries. These are the two most common entries off the top of that small new channel. Again, it's small now, but it won't be small in a faster time frame. And you'll see a lot of examples of that and how we apply that correctly in that Quick Start trading class. But traps and failures, one of my favorites, though, if we don't get that, is as we go lower here, market rolls over, moving average comes over, shallow pullback, lower low, traps, right? I mean, this is just as good, You get that, don't worry about being inside the range. If you got that much momentum rolling over, right, the pendulum swing is still left unhit. Absolutely grab that trap entry. And if you really, really get lucky, right, if you get your game in high gear there, grab that channel, grab that trap as well. So there's lots of ways we can short this thing, whether we're shorting the pop off the high, right, or shorting the drop, right, as it rolls back over again. And then, of course, how do we buy this market, right? How do we buy this market? Well, a breakout. There are two breakouts that I trust the most. One is that two-try breakout, strong move up, shallow pullback, higher high in price, trap low, right? These are called two-try breakouts. Now, you're going to want to see this thing really punch, right? It's got to punch. Got to hold that pullback, get that higher high. What happens is when you get that strong run up, that shallow pullback drives people crazy because they can't get in on it, right? And that higher high creates FOMO. So that trap is on everyone's radar. If you look back here, you can see a similar situation we saw in the early part, right, from yesterday. Strong move up, shallow pullback, higher high, right? Next time it pulls back here, ain't nobody missing that one, right? Everybody wants that entry. That is the same idea up over here. They're very, very easy pattern setups. Just make sure you get the right, again, strong move up, shallow pullback, higher high in price. Now, we may not get that strong move higher, right? We may just go up to the pendulum swing, for example. The buyers may come back, hold the pullback, and go, right? That's fine too. That's called a 1, 2, 3 breakout. Basically, that's the buyer's way of saying, no, 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 we're going for more. Now, we're at all-time highs right now, so it's difficult to speculate where we're going for more. If you recall in last night's video, this was a major measured move up here. So we have quite a bit of open space overhead. I mean, we don't start to run into anything until we get to 14,850. All the way up there, right? We're at 14,350 right now. So there's a lot of potential for some big moves here. But, obviously we got to wait for proof of that first. Once we get that 1, 2, 3 breakout, mark up that high. You got it, right? Mark up that low. And as always, first pullback, first test is the best test. I'm looking for trap entries, looking for failure entries on a faster time frame. And again, you'll learn that stuff in that Quick Start trading class. Now, we've also seen a lot of these bleeders. Right? These bleeders lately, right? These runs and these bleeders. So if that happens again tomorrow, this could also be again on the S&P. All of this stuff pretty much applies universally to both of these markets right now because they're almost identical. If the market was to jump up and start to grind, right? Grind. You know what I mean, right? It's a spike in channel. What do spike in channels tell us to do? They tell us to wait for that really nice deep pullback. Right? Because what happens is when a market grinds higher, it drives people crazy because they don't get that pullback they want, right? It keeps on grinding higher. Now, you can scalp off the lows of this, but I always like to wait for that nice deep pullback, get the bears to come in and try to short this thing. But remember, whenever you get that grinding motion, the grinding motion is a lot of volume traded hands there. It makes a big magnet right up top there. So once those bears come in, they try to short this thing back into that range. You got them right where you want them. Their stops are a sit and duck. This is a great example of in this particular situation where if we get enough strength with that spike in channel, go right along with that trend here. Don't trade what you see, not what you think, right? And that'll be a good example of that. A lot of bears will try to get, I was somebody when I was a rookie, I was somebody who would sell that because I would say, I would justify saying it. Well, the MACD is all oversold and we can't keep going high forever. You know what I mean? People will start to rationalize shorting off that top. Don't make that mistake. That is a rookie mistake, right? If you get that strong run up and we stick, wait for that pullback, rope in those bears and hit them right where it hurts, right? Buy right into those stop loss. And again, there's a lot of space up here. So it wouldn't surprise me if the market ran and ran and ran. We get that pullback, we go up, and then we go sideways here, right, in a range up there. Remember, if we get up there and we start going sideways, and again, this goes for the S&P as well, if we get up there and we start going sideways, what does that range do? It's a magnet. What's the next step? Find levels of support below the range. Then what? Apply those failure patterns off support using the range. You got it, as a magnet. And again, you're going to see a lot of examples of range-bound setups, and these are called failure setups, right? You'll see a lot of that stuff in our trade room. And again, you'll learn the details of that in that quick start trading class. All right, guys. So again, no problem buying this market right now, but they got to earn it, right? They have to earn that. Again, I would love to get that short coming off the high. Remember, stay away from the middle here. Now, as we go lower, what's the problem now? Trend line, right? Trend line coming down. As we go lower, do I get a strong run down, a shallow pullback, a lower low in price, and a trap entry? That would be great, right? Because now you've got that. Now you've got, again, the failed rotation. We've got that trend line coming down, right? Are you going to buy that? Probably not, right? Probably not. So that's going to be a great short. You could also look for that 1, 2, 3 move lower, right? 1, 2, 3. Remember, we're not just simply selling the first one. We're selling the first pullback after we see the evidence of the breakout. We don't want to get too far ahead of ourselves. Remember, this could easily be a buy the dip down here, right? This could easily come down and the buyers gobble it right up and spit it right back higher again, right? They've done it a couple times already, right, in the last 24 hours. So we don't want to fall victim to, again, trading we think, not we see. Wait for that 1, 2, 3. Get those bears to jump off the moving average, and then again, get that first pullback, right? Get that first pullback off the high of that channel. We know the buyers have plenty of space overhead here. Where do the bears want to get to? The bears want to go back to that 154, 140 area, that big range right down below. And that would put us back below prior all-time highs again on that 14,285. So now we get a pretty good idea how to buy it, right? How to sell it. Again, would love to get up, get the buyers trapped, short that, right? Short that off the high, grab that channel, right? Keep it going, grab that move down, keep the trap going. I mean, that would be a great scenario for tomorrow. And of course, right, we'll know more, right? We'll know more in a couple hours here once we see what happens here in the overnight session. Let's keep going though. Nasdaq, we got you figured out. S&P's all ready to go as well. How about some gold here for tomorrow? Now, as you can see here, gold has this big pop higher. They did not take out that major top, and of course, they collapsed back down here. What's the big takeaway right now on the gold? The big takeaway on gold is we have a range, right? A range here. It's actually not just there. If you look left here, there's pretty much a range all over here, right? So remember, ranges are magnets. Range markets are balanced markets. So when a market runs up like this and comes swinging back down again, is it going to stop inside that range? Well, usually it doesn't. It might, but usually it doesn't. Usually it'll take out the pendulum swing on the opposite side. And you'll notice where that puts us. That puts us right back to square one. It puts us right back to where the week began, right? The weekend gap is anytime we have a gap between Friday's close and Sunday's open. So that's the closing price from Friday. It makes a lot of sense here. Finish off the pendulum swing, then to take out that 1761.2 low, right? So we've definitely got that going on right now. If you understand how ranges work, we go up, big move up, buyers try a few times, sink back down in. This momentum now is very, very strong here for the bears. And really kind of the biggest, other than the fact that it's a range, it's such a big rotation off the high that you're pretty much trading this like a trend, right? You're pretty much trading this like a trend until we get evidence of this market now going sideways again. And that could easily happen, right? So we definitely want to be kind of ready for that here tomorrow morning as we're trading. So, again, think about this as a trending market, right? Now, when it comes to a trending market, you want to, follow the trend. And what you want to think about the trending market is trending markets are always on a mission to get somewhere, right? That's the way trending markets work. Ranges are happy right where they are. That's why they act like magnets. Trending markets are trying to get somewhere. They're trying to get, in this case, right down to that pendulum swing around that low. My job in a bear trend is to find levels of resistance overhead and just basically sell levels of resistance going with the trend, keeping my targets down, right, at where we think the market wants to go. All right, now, this is a very strong move down, and we have a range right in the middle, well, I guess the low of this move. So there's a bunch of different ways we can short this. Probably the easiest one is get us up inside this red rectangle, get these buyers to come in, try to buy that pullback. We can now sell into stop losses. We can now sell that pullback combination and short back down again. Again, imagine the market jumps up. The buyers try to buy the pullback. Where are their stops? They're right below those lows. Nice strong red candle, hit it, sell right into those stop losses. And then save some bullets because you oftentimes will get that pullback as it rolls over from there. We call these failure into pullback combinations. You'll see a lot of examples of these in that free trading class, right? That quick start class I keep mentioning in the upper right-hand corner, right? That shortcut course that'll bring you right up to speed with all the best setups we use in our trade room. So one other thing you want to think about is if the market really jumps, right, like it did here today, again, we get some big news tomorrow morning. Let's say the market really jumps higher. Well, now what's the problem now? Now momentum is a big problem, but the buyers, what are they going to do up there, right? What are the buyers going to do up there? They have to prove to us at that point. So it's still, believe it or not, it still is an option to be a seller, but because I have so much momentum, just like on the Eminis, I want to let those buyers try a few times, right? Let them try once, let them try twice, grab that trend line, find those stops, right? And short into those stop losses. Grab that channel. We've talked about this quite a bit already, so I won't go over all the small stuff again, right? But buyer failure into first pullback, again, drill down, faster time frame, and grab that short off the high. If it was to just simply roll over and go lower, right, grab those traps off of that high. These are very common. These are very, very common when a market goes up and then rolls over like that. It'll oftentimes collapse, and so a trap is usually the most desirable entry as it rolls over. And then I mentioned this on the S&P. Let's say, for example, all we get is a very shallow pullback, right? And what happens oftentimes is you'll get a failure like this. And you don't want to take that failure inside the range like this. They'll oftentimes kick back out against you. So what you want to do is wait for that kick back out, find that trap, right, and short the next one. Remember, traps are great when you're trying to avoid, in this case, avoid trading inside of that trading range, right? So watch that trap if all you get is a shallow pullback. Now, how would I buy this thing? This is going to be a bit tricky to be a buyer on this. The better way to buy this as it goes higher would be to, first of all, show me proof the buyers want this. Now remember, if the market just jumps up, I can short that on the two-try failure. But if we go up, we hold the pullback, right? We hold the pullback to the moving average and we jump higher. Now that is a reversal, right? That is proof right now, right, of that reversal. It's a breakout. So what do? We mark up that high, we mark up that low, and my goal is I want to be in on that pullback, that first pullback, before we take out these highs. Okay, now this is where things are going to get a bit dicey, and this is what's going to see how things look, right, as we go. What oftentimes happens in these situations is you'll get that reversal going higher, the market will sprint, and then you've got to kind of wait for the evidence here as the market goes up into those highs here, right? You've got to wait for it now to show us that they can make this move, right? Can they make that move going higher? If that's the case, find my traps, right, to make sure I'm buying nice and low. Or a lot of times what will happen is it'll turn into that spike and channel environment. If I kind of bring it back here, right, we get that run up, we find that channel, right, and it starts to, again, kind of bleed higher there, right? If it starts to bleed and starts to run like that, right, as it goes higher, that is fine. That definitely confirms the move. Now find your traps, right? Find your pullbacks, get those bears roped in, right, and buy right up. In other words, you need to get that strength to hold up there, really show us some proof they can keep this thing going, and then I can buy, right? It's almost like in American football where the offensive line pushes back the defense to give the quarterback time to throw the ball, right? I apologize for the sports analogy, but it kind of fits in this situation, right? The buyers have to push back those sellers, confirm that momentum, and then we can buy that pullback safely from there. Not easy, it won't be quick, right? The easier money will be that 1, 2, 3 go and grab that entry right before we get up to retest the high, right? And again, we'll drill down to a faster time frame to find the entry. Now, as the market goes lower, and again, keep in mind here, we want to try to stay away from the middle, right? Stay away from that middle. As this market, or if this market makes a run lower, now we start to get excited because now this momentum really starts to turn here. As the market runs lower, my favorite entry would be a trap right off of that high. That would definitely be my favorite entry going lower here as we go lower. At this point now, the bears are fully in control. We see that strong move down, that shallow pullback, that trap high, and you want to get that obviously before we take out that pendulum swing low. Another very likely scenario here is we roll lower and we start going sideways down here. Remember, anytime we see, this happens quite a bit actually, where you'll see the market jump off the range, it'll roll over, and then it's almost like, okay, boys and girls, we're happy right here, put the stakes down. You know, it's like they want to sit here for the rest of the day. That's fine by me. The new range is the new range, right? The new range is the new range. What do? Mark up that high, you wait for that pop, right? Wait for that pop, wait for those buyers to come in. You got it, right? Failure patterns, baby, off the top of that range, off resistance above that trading range. Okay, that's an easy trade here if we get down around those lows and we start to go sideways. Remember, new range, new magnet. New range, new magnet. And then we may also, of course, see this market bleed lower, right? Bleed lower, right? I kind of gave away that little channel right there, right? If it bleeds lower, what do? We wait. What is that called? A spike and channel. What do you do with a spike and channel? You wait for a nice steep pullback. You get those buyers to come in and foolishly buy, and you sell into those stops. Spike and channels are one of the top 5 chart patterns you really got to learn as a new trader. They're very common and they're classic, right? The key is, again, you can scalp off those highs if you want, but I always like to wait for that nice big pullback, right? That allows me to risk small, to earn large for that drop back down. All right, guys, I am running low on time on this video. I'm sure I missed a couple possible setups here for tomorrow, but as always, we'll do this together every morning in our trade room, and I'll make sure we kind of clear up any missing pieces I may have missed in this video. Speaking of our trade room, though, every morning, Monday through Friday, I would love to have you there trading this stuff right along with us. I talked about the free trading class, right? The quick start trading class, so make sure you grab that. Or get a membership and come out and join us every morning in our trade room. I'll put all of the membership information you guys need. I'll put it right below this video tonight, either on our website or, of course, in the description of this YouTube video. Do not be afraid to call the office. I'm always here if you guys have questions. We got live chat on the left, live chat on the right, and you can always drop questions in the comment section down below. Again, there'll be no newsletter tomorrow night, so if I don't see you guys in the trade room, I will see you guys back here again on Monday's edition, our next edition of our nightly newsletter. But keep in touch. Let me know what you think. Hopefully by now I've learned to subscribe to our channel. Hope you've hit that thumbs up like button for me here on this video. Don't be afraid to share this info with a friend as well. It's one of the best parts about the financial markets. The well never goes dry. So definitely share this link with a friend, right? The more the merrier here on this nightly newsletter. I will see you guys, right, every morning in the trade room. If not, come back and see us next time. Next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.